Hi, everybody. We are live. This is Bitcoin Critical Pulse. I am here with Chris. So this show, it's a new show. It's along the same thing that we are usually discussing. The idea of bringing more physical insight into understanding Bitcoin and the universe around Bitcoin. Uh, just slightly different angle. We are more focused on using these tools that come from this branch of science that is called criticality, where there are many different phenomena that uh, are on the border between order and chaos. The main example that we are kind of is the foundation of a lot of things we discuss in this show is based on the study of earthquakes from this scientist called Didier Sornet, a French physicist. And he found out that there are very particular signatures before an earthquake. They have a precise characteristic. For example, if you look at the amplitude of the vibrations on the ground, they start to accelerate. They became faster and faster, bigger and bigger in amplitude, and they have a precise characteristics called a log periodic power law, because if you look at the data just before the critical event, so it always leads to some particular event that uh, changes whatever is going on. It's a state. The fact that Chris he always explains this, that really this way of looking at the market is about, okay, what is something going to change? Is it uh, most of the things do not change right now, and then, oh, okay, we are going to have a change, and then it's secondary. Once you know that something big is going to happen, or noticeable change is going to happen, to tell in which direction, right? It's also important of course, in understanding market, are we going down, are we going up? But that is secondary to these changes of state. So this is what where our focus is. Eventually, Sornet uh, applied these ideas to financial market in a very, very successful way. Um, we have a website. I think actually, Chris, will be a good idea, and eventually to add like a page with a bibliography where people can go and read the different books about this topic, including Sornet book. He wrote a book that is called Why the Stock Market Crash. It is a very nice book that people can read as an introduction to a lot of things we discuss in this show. But yeah, and Chris, in, he can introduce himself a little bit, but we have done this a few times. You can also see our previous shows. He has a lot of experience in traditional financial markets, but he brings this new insight. So it's a combination between understanding uh, traditional market, but also with these insights from physics. And I'm very impressed. Me being a physicist and Chris, not having that formal education, how well we align in our way of thinking about these things. But anyway, Chris, if you want to add anything to explain the show and what we are trying to do, and there is also the disclaimer if you want to.
Sure. Thanks, Giovanni. Yeah, apologies. We have to put the disclaimer up. We're obliged to say this is not financial advice. It's for educational purposes only. Trading involves risk. Past performance is not a guarantee of future performance. And please do your own research. And as you've all read the disclaimer, we can move on. So let's start talking about what's really important and what's been going on the last few days since we last spoke, which was the Friday before the July 4th holiday period. So what you see in front of you here is the log periodic power law chart for the daily price activity. And the yellow vertical line that you see right here is the last time we spoke. And at that time, we were clearly in this continued white state that had been progressing for a long period of time, and we were waiting for resolution. And remember that we think of the market as really only having two states. One is confusion and one is conviction. And when there's a white state, as shown in this chart, we think of that as confusion and an unresolved tension that the market is trying to figure out where it wants to go. And once it breaks free from that state, it has conviction and intent, and it moves usually in the direction first indicated by the movement out of this log periodic parallel white state. And you can see in this case it's up right here. So back here we had two projections to the upside, 114,000, and then we had another projection which was 118,000, which came back off screen here to the left. Back here, which was generated in May. So both of those levels were hit, and after our meeting here on the 28th of June, our last podcast, there was another target that evolved as a function of the price activity of 116,000. So that also was met. So several things that are worth pointing out. One is that price broke fairly convincingly above the white state line here, and it did it with this purple extension. And the purple in this graph represents period doubling, and that's when there's a lot of agitated price activity, feeding back on itself and extending the pressure, or the pressures sort of coming out of this white state and moving off with conviction in a direction. We also had, excuse me, a couple of supporting signals come through here, this triangle and this green dot, which I'll just expand it so it's a little easier to see. These are both confluence and confirmation signals that come from the power law methodology. And then you'll see these green arrows, which have been stacking up fairly consistently since late June, which is another tool that we have that suggests that there's support for the general upward movement that's creeping in through this period here. This green background that you see here comes also from the log periodic power law tool, and it takes all the information that's at hand and says, yes, everything's aligned. This qualifies as a bullish type move, and we're classifying price activity for the moment in that way. So these three sets of movement up to and then through and extending beyond the white state suggest that we've broken out fairly convincingly. We've taken out the upper targets. And I guess the question that everyone's probably asking is, okay, well, where's the next upside target? Well, from the daily perspective, there isn't one. There's nothing in the price activity that's generating these target levels. So when that happens, one of the things we look at are longer time frames. And this is the weekly chart. And you can see that it too had some upward projections which had been met, but there's nothing to the upside in terms of projections here. So we can't get any clues from that time frame, but we have the sort of self-similar pattern of break above the white state. In the weekly, it's more of a stair-step type process, which is something that we typically see when a move gets underway, particularly more so to the upside than the downside, interestingly. So is there something we can learn from the monthly? And the answer is yes. You can see this classic stair-step type movement that's been occurring in the monthly, the classification by the system of it being a bullish state with this green background, the confirmation signals and confluence signals underneath each of these bars suggesting that there's strength and conviction in the movement, and the upside target that this particular time frame is suggesting is 124,211. So we can take some comfort
in which time frames, Chris?
So this is the monthly chart, and these price targets are sensitive to the movements that occur in price on an ongoing basis. And as can be seen here in the daily chart, you can see that the targets are constantly being revised. So here's one here of 110,643 that was on the 25th of June, and it was invalidated by this price down here.
Right.
Price moved down, so this target was eliminated. It was voided, and a new downward target was created between this point and this point, and that price target was hit. And then subsequently another P1 target was calculated, and here it is here at 110.7, and that was subsequently hit. So there are 5 different price targets that we produce using information from the power law output and the phasing of price, and they're constantly in a state of flux depending on the price action. So the P1, P2 are the shorter time frames, out to P5, which is the longer time frame, longer horizon in view of what's happening in the market, and they get reset from time to time. So in this case, the monthly that we're looking at, which is showing a P1 of 124, you can see that the prior P1 price was 62,000. So these are very large macro cycles essentially that are occurring, and they take time to evolve and iterate. So this is a valid target basically until it isn't, and you'd need to see some pretty significant downside price activity for this to be invalidated.
Very good.
The other thing that I thought was interesting is your chart, Giovanni, which is the power law chart. And for a long time, we were bouncing along this theoretical price line here. Yeah. And this is us breaking out of it that I was just talking about. But what's interesting to me, and I'm not sure perhaps you have an opinion on this, is this line here, which is your decay curve, right, which is at about 125,000. And yeah, I don't know that there's any significant that the monthly target is close to that at 124,000. You may have a view.
So this chart, what this chart does, right? It shows the general power law, and it's so cool and interesting, right? Like we pointed out that we're basically oscillating around it. But added to this idea that basically the price was trying to find itself, right? It was some kind of consolidation situation. And this purple line, we are all based, I draw some major deviations. This one is like basically one standard deviation away from the power law. Mm-hmm. So that is the significance of it. So these are supposed to be relevant targets because Bitcoin tends to have these deviations at this particular, like 1 to 3 standard deviations when we are in a bull market. So it's going to be a milestone if we reach, because it will indicate a pretty large deviation from the power law. We usually go through it quite easily during these bull markets, but it has not been easy this cycle. It's much less bullish than previous cycles. So this is why it's there. So it's interesting that there is some convergence between what you're describing and what the power law says.
Yeah, it is interesting. And the other thing that I find occurs with these targets is that they tend to stack. So we've exhausted, or achieved rather, all of the daily targets that we had. And there's nothing above it. So all we have is the momentum that's coming off this movement, mm-hmm, which at the moment is still very strong. There's no indication that it's running out of steam. We've still got very significant price activity, as evidenced by the purple shading of the power law lines. And it is possible that this could come back and go into another white state in a stepwise type motion,
Yeah.
We just don't know. What would lead me to think that that was not going to happen would be if we had more of these lower time frame phasing components generating even higher price targets. But often what happens is when you get an extension like this, you have a period of consolidation where these lower time frame targets can regenerate.
Mm-hmm.
So if we look at some of these lower time frames, let's go to 30 minutes. That's probably going to help. Yeah. So you can see here, this is the 30-minute chart. And the reason I'm showing you this is because we have this stepwise function here over the last day or so, day or two. And you'll notice that we have this extension up here, which is eerily similar to the way the daily has broken out. And I'm just using this to illustrate the point, as opposed to say this is exactly what's going to, what I'm suggesting is going to happen.
Yeah.
And we've had this period where price then bounces along, and you can see that there are price targets being generated, but at fairly compressed intervals from high to low, until we get a separation towards the end here of the faster LPPL, which looked like it wanted to resolve to the downside, but couldn't make its mind up. It's moving between red and green states, as you see here. And then finally, at this point here, where there's these confirmation signals coming from the LPPL, we get the break, we got the confirming background color that all of the states that are critical for the system to consider it to be a bullish environment are being met. And then we have this upward move to another stair step where the same sort of sideways price action happens again, and then it's repeated here, and so on. So, but you can see that once we get this break, there's some upside targets that start getting generated, and it tends to give you some sort of comfort that there's something for price to work towards.
Right.
It acts kind of like an attractor, I suppose, is the way you could think of it.
Mm-hmm.
But it's possible that that's what we may be looking at on the daily basis. So given that the monthly has this upside target of 124,000, is there a chance we could meet it? Absolutely. Could it be invalidated? Absolutely. We have to watch these lower timeframes to give us a clue as to whether that upside strength is going to extend or consolidate.
Yeah. In general, though, we can say that the price probably is not going to have a very strong correction down, right? Like, because there are some silly posts online that I don't know if even worth to discuss, but they say, "Oh, we have reached a peak," in the cycle, and there is no indication of that right now. It looks.
Yeah, I've seen some of those comments, and it's the old story. Firstly, anyone who's in the business of trying to solicit clicks and looks and followers has to make fairly outlandish claims in order to get people's attention, and they've got a 50% chance of being right in the general scheme of things.
Yeah.
So if they are, they're a hero. If they're not, they just keep making outlandish claims until they're a hero again. Mm-hmm. But also the methodologies that are being used to come up with those sorts of targets, I would say, are not the most robust. No. So here we have two methodologies that are rooted in science, pretty significant science, I would say. One, yours, which is looking at the long-term price outlook for Bitcoin based on the power law. And this shorter-term methodology, which takes the power law principles to identify the state change at lower intervals, lower time frames, in a way that helps us identify when there's conviction in the marketplace or when there's confusion and unresolved tension. So right now, we've moved beyond unresolved tension. There's conviction to the upside, and there's nothing that's telling us there's downside conviction anywhere.
Yeah, I love it. I love this approach. Can you maybe share, because we were discussing just before the show, you had very nice insights about the derivative that are around Bitcoin, right? Like strategy, for example.
Sure. So about 2 weeks ago, I got very interested in why Bitcoin wasn't moving, why it was stuck at this level. And my thought was that it had something to do with shorting activity in Bitcoin. And to try and figure that out, I did an analysis of the infrastructure on which Bitcoin operates. So sort of like saying, okay, well, here's a bunch of shares. They trade on an exchange. How does that all work? Who settles them? Who clears the trades? Who are the brokers? Who are the actors in that game? So I did the same thing for Bitcoin. And I ended up creating a Sankey diagram, which I posted. I can share that subsequently if anyone's interested. But it basically maps the interrelationship of all of the actors. So if you think of the universe of Bitcoin, you've got lost Bitcoin that was created very early on where people lost their wallets or it was confiscated or disappeared, ended up in a computer hard drive in a trash heap somewhere. You've got ETF players, you've got treasury companies, emerging sovereigns that are starting to own Bitcoin. You've got all of the hodlers who are holding Bitcoin. And there's a growing universe of participants who are playing in that space. So that's part of the core that really kind of doesn't move very much. It's pretty solid. It's like a block that's just not going to come onto the market. And then you've got liquidity providers and people who are trading against or making prices on Bitcoin. You've got option traders who are not just trading the delta, but you need to also understand the impact of the gamma, which is the second derivative, the delta of the delta, on price activity and what happens if you're negative gamma when price of Bitcoin starts to move. Mm-hmm. Then you've got all of the exchanges and the clearing mechanisms that exist to process transactions through the system. It's a very complicated thing. And embedded in that system are multiple feedback loops as a function of the execution process, how trades are actually implemented and executed, how various bots and algorithms implement margin calls, trade execution from everyone who participates in the market. And those different components generate volatility that's sometimes very unexpected, and it's a function of things that you don't expect or think about. And that led me to investigate the treasury companies like Master and all the others, or Strategy as it's called. And what became very clear is that there's a massive arbitrage with all of those companies. And the way the arbitrage works is Master issues stock and buys Bitcoin. And it issues an array of financial instruments from preferred shares to convertibles to common stock. And it takes the money that it gets from issuing those instruments and it buys Bitcoin. And it has this thing called an MNAV, which is basically the value of the stock. And if MNAV is greater than 1, it means that there's a premium bid for MSTR because people are buying it as a proxy for Bitcoin because they aren't able to sort of buy the physical. They don't want to have the hassle of dealing with a wallet or owning the actual Bitcoin itself. So they buy Master as a proxy. But the flaw in that thinking is that if this MNAV becomes significantly larger than 1, the ratio of 1, then an arbitrageur will come in and sell the stock. They'll short the stock and they'll buy Bitcoin against it. And they lock in that spread. And what they're waiting for is that spread to collapse, to come back in towards 1. And as long as the spread is greater than 1, Master Strategy can issue more stock and buy more Bitcoin. And this is one of these feedback loops that I was talking about. And that's a dynamic that can actually work in both directions. Based on what I was able to find out, I think the average price that Strategy owns Bitcoin is somewhere in the low $70,000 mark. So as long as the price of Bitcoin is above that level, it's fine. It's in healthy shape. It's got nice profits on its books. and it can meet all its obligations. But if you dig into the filings that Strategy has made with the SEC for its various security offerings, you find out that its software business is not making any money, has no prospects of being able to meet its financial commitments. And the way Strategy is proposing to meet its dividend payments to its shareholders who bought preferred stock or convertibles is via more capital raising or through the sale of Bitcoin. So, hold on one moment. Apologize, I've got some very friendly dogs. At $72,000, if the price of Bitcoin comes back to that level, and Master has to meet its covenant approvals, its covenant ratios in its loan documents. If it has to distribute dividends and it doesn't have the cash on hand to do it, all it can do is sell Bitcoin to raise capital to do that. So if the MNAV compresses to 1, then the arbitrageurs have a profit. If it flips inverse, then it's an interesting dilemma. It's less than 1, which means that Master has some problems. So I wrote a little bit about this and I posted it on one of Giovanni's Discords. But this sort of dynamic is embedded in the marketplace, and it's not just one company, it's all the treasury companies, it's anyone who's levered. And when these situations occur in the marketplace where the ratio, the difference between MNAV and the price of Bitcoin, in the case of Strategy, is excessive, it causes action in both Bitcoin and in the stock. And this would apply to all of the financial instruments that are issued around Bitcoin. There are arbitrages like this that are in play all day, every day, in various forms, and it creates a dynamic and a flow of activity in the marketplace, which helps explain some of this volatile pricing action that you see in Bitcoin.
Okay, that is very interesting. What I did find myself is that, and something that we can discuss and compare notes, but I'm more interested in how the price action in MicroStrategy looks like relatively to Bitcoin, and at least since MicroStrategy started to buy Bitcoin, they are strongly correlated, of course, but basically there is a power law. It's kind of, one has to be careful because really valid power laws are applied over the long term, many orders of magnitude. But, there is like a 1.3 power law. You can make actually a model. It kind of decoupled at the beginning of the year when a lot of people were doing a lot of speculations. We were pushing the stock higher and higher in an almost exponential fashion, and they say that it wasn't sustainable. Many people didn't want to listen because they thought we were going to become. In fact, we were a couple of actors that literally say we were going to become billionaires by trading MicroStrategy. But so silly. But anyway, and then now we are back to that behavior. So we are pretty strongly coupled with MicroStrategy having a little bit of a leverage. Now, I don't know if this is going to continue or if they continue to do the game that they're playing. I think because many people have pointed out that this game has been played before, with silver and gold, and there were other companies that try to do something similar with other instruments, but Bitcoin is pretty unique, so these are good observations that you have made, but I wonder if there is some mechanism that, and in general, I think what helps MicroStrategy is that Bitcoin beats almost everything else, right, in terms of evaluation. So they can dilute their stock, but as far as if Bitcoin continue to go up and in a pretty relatively strong fashion where it beats the average stock, we are going to do okay.
Yeah. So it's really interesting, because if you just follow the example that you're talking about, if strategy continues on its path of issuing securities and buying Bitcoin, and this whole party continues, then you've got this self-reinforcing cycle, this feedback loop where Bitcoin goes up, strategy goes up. They both, move up in price somewhat in tandem, and it's a self-reinforcing correlation as well.
Right.
But it's that all-important spread, the MNAV. If people decide that they want to be long strategy because it's going up, because Bitcoin's going up, well, you've got the self-reinforcing loop that's causing that. And this applies to all of the treasury companies doing this, and they're all kind of like helping each other. Then it's the question is, how is that going to get arbitraged away? Yeah. And there's a point where people who are short the stock and long the Bitcoin, as long as they're moving lockstep up, they don't care. Their only cost in holding that position is the cost of the borrow of the stock that they're short.
Right.
So as long as there's a big enough float and there's access to that, and the premium that they have to pay, or the interest that they have to pay for borrowing that stock to short it, is not excessive, then they're fine. They can hold their position. And if the MNAV increases, then they'll do more of that trade. If it's significantly above, they'll just keep doing more and more and more until their footprint in the market becomes so significant that it basically forces a white state event on strategy, and the MNAV ratio collapses towards 1. And then you've got the opposite feedback happening. They're selling Bitcoin and buying back Master. Yeah. But they may decide that they want to do that in a clever way, because they know that if they're selling Bitcoin and Master's collapsing because Bitcoin's collapsing, then maybe they'd hold their short position and buy calls on strategy, or and just let that run to the downside. There's so many different ways that they can play that game, and there are so many different ways that it can impact the dynamic of the price of Bitcoin, both in a positive way and in a negative way. You just have to understand how the players are implementing this. And the point of that Sankey diagram that I did was to try and understand and map those components. And the point I'm trying to make here is that the log periodic power law critical pulse is about state change, and price is a secondary thing. Price comes from the commitment towards the asset, as we've seen in the last few days. And when that commitment's in place, the indecision is gone from that consolidation period that we were witnessing in the white state timeframe that ran for a month or two. That's all been washed out. So now it's fresh intent. There's fresh intent in the price direction, and that is a footprint. And the LPPLCP is observing the footprint that comes from the price activity and translating it into the structure that's underlying, the structural information that's embedded in the market price. I don't know if that makes sense, but
yeah, it makes sense. Okay. Now, my question is, the tool that we're developing can show some of these signatures, in the sense that maybe people can use to play some of these derivative games. Is there a way of finding actionables through these tools when we apply them to, for example, MicroStrategy? Yeah, go ahead.
That trade has been implemented by a number of very well-known hedge funds, and it's not a secret. People talk about it openly. It's a known trade, and it's not overly sophisticated, I wouldn't say, but it's a good trade. And the downside is the cost of funding and the borrow, and that's it. Otherwise, you can just sit there all day long, short strategy and long Bitcoin. And that's good for Bitcoin. And you've got this, self-reinforcing loop until the trade starts to unwind, when the dynamics change everything. So you can implement that trade if you're able to short stock, and if you're comfortable being short the stock against being long Bitcoin. Sure, anyone can do that. You could probably implement it in a way via options. That's a whole other discussion, but there'd be a way of doing that. And in terms of the tool is observing the structural dynamic of the market, and it's saying, okay, we're in a period of reflection and consolidation or mean reversion, or not. And right now it's or not.
Yeah. For example, looking at this chart, right, I don't see a lot of space. Like, this is a model that they did of MicroStrategy.
Mm-hmm.
Where, the blue line is the price itself, the red is the model. And the model, like I say, I found this power law between Bitcoin and MicroStrategy. You can see the power law was holding very well. Now, there are times where, yes, there is some differential, right? But it's more a differential in scale than in direction, right? It's very difficult to find places where Bitcoin went up and MicroStrategy went down, So I don't know what we have, at least historically. If anything, here, this was the decoupling that I mentioned. In fact, I had to correct.
Well, I think the thing that you'd have to do, Giovanni, is plot the MNAV of Master on this.
Right. But you see, this is what I'm trying to say, that people focus so much on MNAV, but then it doesn't really reflect on the price, because people don't, in the end, you don't trade MNAV, you're trading price, right? You respect, because if somebody wants to short strategy and wants to go long with Bitcoin, you're expecting basically them going in opposite directions, right? And this doesn't seem to happen, at least not often. So I don't know what you have in mind.
Okay, but if you think of it, you wouldn't be doing the arbitrage if the MNAV was 1 or 1.1. You'd be doing it if it was
I get it, because people put a lot of emphasis to this MNAV. I'm saying Bitcoin is so different type of asset that I'm not sure if it matters. I know that is what traditionally people look at when they look at things like this, but I think maybe it's the wrong way of thinking. That.
No, I hear what you're saying. My only comment is that this is one group of players in the marketplace out of that universe of people that I described earlier that form this environment of that Bitcoin functions in. On the platform on which it exists and trades, and the actions of those people as a function of the trades that they're implementing,
right, yes,
influence the price.
No, I don't. Absolutely, your analysis. I'm not discussing you being wrong in trying to understand what we are thinking. I'm saying that what we are thinking seems to be incorrect to me. That we are not looking at it in the correct way.
Well, I mean, this comes back to your earlier comment that there are people who are calling for Bitcoin to, collapse to some, crazy level, or rally to some crazy level.
Right.
And it's fine to be alarmist or, shouting these prices out if you want to do that, but it's not founded in anything that's rational. And all we have done here is take a couple of methods that are rooted in science, that have demonstrated efficacy in multiple fields where there's self-similarity, scale invariance, and where we can identify in those different time frames the footprints that are left in the market by different participants. And we don't know at any point in time who all of those participants are that are swaying the market one way or another. Right. We might be able to figure it out a little bit and get some clues based on, the information and knowledge that we can glean from the marketplace and from our research. But all we're doing is saying the market has conviction, the market is confused, and the rest doesn't matter.
Yeah, I completely agree on that. It's a very beautiful way to look at the market.
Yeah, and it's so liberating, because you're not
It is.
you're not sort of wedded to some extrapolation of a squiggly line, or some archaic technical analysis that was made for 1910.
Yeah,
in trying to interpret an asset that's of this century.
absolutely. Yeah, I really like it. And talking about that, guys, go to our website. So we have a website. I'm going to look for it. It's called, you can see it's called Complexity Trading. So this is our website. So there is a little box where you can sign up for, so it's called complexitytrading.ai. So go to our website and sign up, put your email, because we are going to actually summarize a lot of this idea. Plus, we are going to give some kind of introduction to the main topic, like talking like a little review of the main, maybe chapter by chapter almost. Is one of the things I'm thinking to do of Sornet book. So it will be a big resource to try to start to think about the market like Chris is describing, this idea of states. So it's an important resource that we are going to work on. Probably it will be kind of once a month, and next issue will come out at the end of this month. So in fact, it will be the first issue. So please sign up, go to the website. It's free newsletter. And right now, our main focus, this tool can be applied to many different things, but our focus is Bitcoin and the universe around Bitcoin, all the different treasuries and different yield stocks and so on. So do you want to make some concluding remark, Chris? Or?
Yeah, sure. So it's taken a little while, but we've finally been able to get the log periodic power law critical pulse tool ready and out there and available. So it's going live as of today. So if you visit the complexitytrading.ai website and follow the icons for the LPPL CP, it will take you to a place where you can subscribe to that tool for use on TradingView. There's also a little bit of an additional explanation.
Right. What is that? Where it is, Chris?
So right there. So in that white space, that little square that you see next to the text, you can click on that.
Yeah.
If you click on that.
Let me do that on the website itself. This little square here?
Yes.
Okay, yes.
And you'll see you can subscribe or learn more. And if you click learn more, it'll tell you a little bit more about the tool, what it does, how to use it.
Okay. Yeah, so there are two different things, right? There is our website, our newsletter. The newsletter is completely free. You can sign up here for this newsletter. So you get information, you get updates, etc. But if you are interested in these indicators, because are these indicators all available right now, or just one of them?
No, just the log periodic power law. There are 10, and they're all one structural framework. So at the root of what all of these different indicators do is the log periodic power law. And related scientific methods. And they use different techniques to understand and interpret price and do something a little bit different. So historically, what people would do is use RSIs and MACDs or moving averages or stochastics, all of these different old school tools that were really based on price. And people would look for confluent signals and try and use that to give them comfort that their particular analysis of the market at a point in time was appropriate, and they would, enter trades off the back of that. And some of that still works. I think it's largely a behavioral artifact, but because they're all rooted in the same suite of information that is price, it's really just signal stacking. So it's self-reinforcing the same signal essentially that's generated in a slightly different way. What these tools do in combination is take entirely different methodologies and inputs. And when you start pairing them, you can mix and match them in different ways depending on what your trading style is. But they take totally different methodologies and inputs to identify underlying structure and stress or compression or expansion or a whole array of other things in the marketplace, all of the things that form the components of criticality at the edge of chaos, and identify when these are likely to manifest and give you an opportunity to do something in the market before all of these old school tools even figure out what the heck's going on.
Okay, so if you click on these, right?
Yeah.
Then and by the way, these indicators, they will come up online, right? Eventually.
Yes, they're all built. They're all being completed right now, and they'll be uploaded to the site over the next little while. And there'll be a different set of bundles that people can mix and match these into, depending on what it is they're trying to trade, or what their style is, whether they're macro or scalping or pivots or whatever. Okay. It doesn't matter what your trading style is. There's a combination of these things that will work for you.
And where people can read about them, because if I try to click on them, there is no a specific explanation for each of them.
Yeah, it's there. It hasn't been turned on. Each of them will have an explanation. So if you click on the little square for the LPPLCP, click on that, and then click on Learn More.
Yes, I see.
So every one of the tools will have something like this that tells you what it is, how it works, what it can be paired with, why it could be paired with something, what time frame it's good for, what trading style it's good for. And you can look at them all and decide which combination is best for your particular approach to markets.
Great. So again, summarizing, right? So on our website, it's still a work in progress. We are going to make it better and better. There'll be, different section eventually, like maybe books for you to read, all kind of things like that. We're trying to, not rush, but trying to share these with the community at the same time. We're trying to make it. Chris is much more careful when he's very methodic, and he wants everything to be very well done. I like that. It's a very good balance. But write down your name here, right? Your email. It's going to be completely free. But then, if you want to learn more about the indicators, you click on the little symbol, and then you can read the explanation, what it does, some examples of how to use it, etc. So these are, and we are trying to share with you actionables. Like for example, you can do cover calls with this using this information. So the things like that, right? Because it's one of the things that, at least from my side, I'm trying to push to the Bitcoin community, that you have to be, holding Bitcoin is great. It's still the foundation of what we are doing, but you can start to be a little bit more aggressive, and using all these derivative tools that are being developed, to actually multiply your Bitcoin. But do it carefully. Look at it as a learning experience, where you learn new skills, new ideas, and so on, and do it gradually, until you build confidence, where you are actually feel that this is what you're interested in doing. And so if we go back, okay, and if you want to go ahead and actually start to use these, you can sign up here. You can put your information, and so because we are very transparent with everything, so right now, subscribing to all these indicators, these are very sophisticated indicators. They are indicators that you can use to do all these analysis, like to use for them, for example, for option trading and so on. The price is about $100 a month, and right now is mostly the main indicator that it's already available, but eventually all the other indicators will come online, and it's basically a package that you get. Now, I'm going also, that is one thing that is not clear from the website, but we are going to add, I develop also TradingView, and these are all TradingView indicators. I also develop several power law long-term TradingView indicators. We will add them to the package too, for, as a bonus. Some of the main indicators that I have developed myself, they will be added to the package. Okay. So this is how you can have access to this information. All right, Chris.
So I just say a couple more things, Giovanni.
Yeah.
The whole goal of this, I've said this before in the prior conversations that we've had. All of these tools came from a frustration that I had with what was available out there for people to use in the marketplace. And, I really used my knowledge from being on Wall Street over many, many years to really identify things that were differentiated and not out there, not available to the average person. And, these tools start to bring that way of thinking about markets to people in a way that previously was unavailable. And I really emphasize that the core of this is the log periodic power law critical pulse. And it's a way of thinking about markets that's very, very different. It's the two states, confusion or conviction and intent. And that's at the core. And the first release is the core component, and experiment with it, start to see and tune into us here and listen to how we're thinking of it being applied to Bitcoin and other related crypto stocks, but it has application across all markets and all timeframes. So think of it in those timeframes. And to manage this rollout properly, we're limiting the sign up for this first tool to 100 in this little release period, and predominantly to almost, I would say, exclusively to folks who are on this channel and involved with Giovanni and his work with the power law. We're not wanting a lot of people involved right now. We want to make sure that we get it right and that people can see the tool and ask questions, and maybe I can put some enhancements on to improve it a little bit depending on the feedback that I get. I don't want a ton of people signed up to this to begin with, and I really want to restrict it. So we're only releasing 100 invitations. We do have a number of emails from people who've registered on the site, some of whom have expressed interest in the tool. So some of the slots are filling up, but to everyone who's listening, you should know that. And once we've done a bit more work and interacted with people and had their feedback, we'll be seeking to improve this and then bring on all the other tools that will allow you to think differently about participating in markets.
Yeah, it's basically almost a closed alpha that we are launching. And so please, if you're really interested in these very innovative tools, they are unique because I think I told you how I discovered in a previous episode, I discovered Chris. I was interested myself in developing something around the log periodic power law because it's a very, very powerful tool. I know I have codes that can run the log periodic power law offline using Python, but I was looking for something that can work online. So people, just to give you an idea, how powerful these things are, right? So there was an observatory some time ago where Sornet himself, he was monitoring some of the major markets like SP 500, SPY, and so on. And he was posting regularly some alerts about all these critical events. Well, eventually he was bought from the Swiss bank for quite a bit of money, and they took it anymore. It's something that a bank is using secretly to actually try to coordinate their actions in the market. So, this is the type of indicators that we're discussing. People that are professional are using them. And they really value them. The difference is that we're trying to make them more available to the average investor, because we are sophisticated, we are not easy to interpret, and we are trying to make it as simple as possible. And this is one of the reasons also we are trying to do on TradingView. I had the same idea, but I immediately realized that it was not trivial at all because TradingView has a lot of limitation computationally, graphically, and so on. And I made a bet that nobody tried at all. Or, I mean, if they tried, we were not successful. So, when you look at all the different indicators that are available, you find 10 different versions of Fourier transform, all the classical things that people do. But I thought, there'd be nobody that did the log periodic power law. And instead, there was one person, and this was Chris. So I was very impressed by, he came up with walk around, we can say, to the work kind of in the spirit of what the log periodic power law is trying to do. But I think actually it's a very good approach because it simplifies what the log periodic power law does and also generalize it. So I read his explanation, very beautiful physics explanation about, criticality, etc. I say, oh, this person knows what he's talking about. It's one of the best explanation about what the log periodic power law is. In fact, probably even better than Sornet himself. And this is when I contacted Chris, and I thought he was actually a very young person, maybe a programmer, etc. Not that Chris is not young; he's young in spirit, but neither of us are. But that is actually adds to the value because he brings all this traditional finance experience. He has worked for many years for in the more traditional side of things in finance, and so combining this innovative way of thinking, that breaks kind of the mold and is trying to do something different from everybody else, and together adding this also experience, from with traditional tools. In fact, actually frustration, right? He said that he got frustrated by these tools. It's unique. I think it's very, very unique. So I'm very honored to work with Chris, and I think these tools are going to be very useful to our community.
Thanks, Gio.
Oh, thank you. Okay, I don't see any. Okay, so maybe this particular comment. I have been playing around with the log periodic power law, critical pulse. It is well made. Okay, great.
Thanks, Boivo.
So we have already somebody that is testing it. Yeah, we would like more feedback. This is why we are keeping the subscription to few people, so we can get the feedback and improve things. Yeah. And she's asking this.
Yeah, so there is. So let's
if I remember, actually, it's a lady, but maybe Boivo can correct me. It's somebody from our Discord channel. If I made a mistake, please correct me. But I think she's a lady, if I remember well. But go ahead, please.
Sure. So can you just put my screen back up and I'll
sure
navigate around?
Yes. Let me see if I can do that. How to can do that? I can stop mine. Yeah.
So the question is there any significance on the position of the LPP-LCP lines being on top or below price? So it's a really interesting question. And it depends on kind of what the breakout is. So you can see that at these lower levels back in September, price broke from a low and moved up. And for the most part, the power law lines were beneath price until we had crossovers occurring towards the peak of that move. Then we had this confusion, and then we had a move down, and the same thing happened. So here we've got one of these stepwise functions that you can see them occurring back here from the period of September through to December. So you've got a plateau, short-term plateau, then a spike up in price, and then a step, and then a spike up in price. And all through these spikes up in price, the power law lines are on top of or above the price activity. So that phenomena occurs when you're going through different types of price action. Sometimes it's interesting to note here, for example, in March, you can see price crosses through both LPPLs, the fast LPPL at this point and the slower one at this point, and continues up, but then sort of comes back down again, only to reassert itself in this last move that we had up that ran from May through to June. So when price crosses through these LPPL lines, it's somewhat similar to how you'd think of price crossing through a moving average. But you can't trade it that way because these are non-linear relationships and don't function the same way as a moving average does. So it's a totally different type of mindset. You can use it as an early warning and think about the relationship of price to these lines, but you need to think of it contextually in the move and where it's coming from, whether it's breaking up, like we see here, where price is below, whether it's a different type of a breakout from one of these stair-step type methods that we see occur from time to time, where the relationship between price and the LPPL lines is different. So all of that needs to be taken into account. And the two lines, you'll notice the distance between them. Sometimes it's very narrow, as in these strong upward moves. And in these downward moves, you get these kind of rollover effects. There's a mirror of this move that you're seeing here in March occurring here in May through June. So the distance between these lines is something that's interesting to watch as well. They all have impact in different ways, and you really just need to get yourself familiar. So I would highly recommend that you use the playback mode in TradingView and go back in time in different time frames. Do the daily, do a hourly, do a 1 minute, a 5 minute, whatever time frame you're comfortable in. But just observe how these lines interact with price, and you'll start to get a sense of the recurring patterns, the self-similar patterns that repeat regardless of the time frame. And I think that should help you.
Perfect. And by the way, I made a mistake. He's actually Boivo corrected me. He's a guy. I was thinking about somebody else.
So no worries. One other thing I would say is I launched a Discord with a chat room for the LPPLCP on Bitcoin for anyone who wants to talk about it there. So just send a DM and we'll get that going as well. And Giovanni has access to that as well, so he'll be able to see and participate in that conversation as it evolves.
Fantastic. Okay, guys, I think we covered a lot of things. So please, again, sign up for the newsletter. We will keep in touch there too. And we will have our next episode, same time next week. Bye, everybody.
Thanks, everyone. Bye.